Elon Musk's ambitious promises are seemingly losing their allure for a growing number of Tesla investors. Shares of the electric vehicle giant experienced a significant 9% decline on Thursday, following a dismal earnings report released after market close on Wednesday. The latest financial results revealed double-digit percentage drops in both earnings and revenue, marking the company's largest sales decline in its history. Tesla is also navigating a turbulent financial landscape, facing the discontinuation of a crucial $7,500 tax credit for U.S. EV purchasers starting October, and the dwindling market for regulatory credit sales, a stream that has generated $11 billion for the automaker since 2019. During the recent earnings call, Tesla CEO Elon Musk largely sidestepped these immediate challenges, though he did acknowledge the company might face a few rough quarters. Instead, his focus remained on his grand vision for the future, including the long-anticipated robotaxi service and the humanoid robot, Optimus, which remains under development. This noticeable lack of detail regarding tangible near-term solutions left many investors and analysts feeling underwhelmed. Industry experts note a distinct shift in investor sentiment. One analyst from CFRA Research commented that while investors have been remarkably forgiving of Tesla despite clear business headwinds for several quarters, a more realistic view is now prevailing. He emphasized that Musk's past brilliance lay in his ability to keep investors fixated on the long term, overlooking immediate and intermediate challenges, but current headwinds are proving too difficult to ignore. The firm had already downgraded Tesla's stock to a neutral rating in April, and even some of Wall Street's most fervent Tesla supporters are suggesting that time is running out for Musk to deliver concrete actions. Another tech analyst noted that the market is clearly losing some patience, despite his continued belief in Tesla's autonomous vehicle and artificial intelligence aspirations. Musk has a documented history of making bold predictions that don't always materialize as quickly or comprehensively as promised. For instance, his robotaxi service was touted as being operational within a year as early as 2019. While a limited rollout occurred in Austin this June, restricted to company associates and requiring an employee in the vehicle, this modest debut didn't deter Musk from claiming the service would cover half the nation's population by year-end. Achieving this would necessitate securing regulatory approval in 2 states per week, including challenging jurisdictions like New York, which currently prohibits autonomous vehicles on its roads. An analyst from Morningstar, while confident in Tesla's eventual robotaxi success, believes the software requires extensive further testing and doesn't foresee a full product until 2028. Another example is the Cybertruck, Tesla's sole new vehicle offering in 6 years. Musk had projected annual deliveries of 250,000 units by this year. Yet, full-year sales for the Cybertruck and Tesla's 2 other high-end models combined were fewer than 80,000, with sales for these 3 models plummeting 52% in the most recent quarter. Furthermore, Tesla began the year forecasting higher sales after its first annual sales decline in 2024. However, following 2 consecutive quarters of record sales declines, most investors now doubt the company will meet this goal. With Musk himself barely mentioning car sales during an hour-long conference call, it's clear that shareholders are no longer content with just a visionary outlook. One analyst highlighted that while Tesla has often received a pass due to the ambitious nature of its products, sustained sluggishness in the core automotive business will inevitably shift focus to more immediate concerns.